Well, let's move to another sector of the market now, property, and the housing market in particular, which seems to be rather enthusiastic at the moment. I'm joined now by fund manager Roger Montgomery. Welcome there.
Hi, Ticky. How are you?
I'm very well now. Now, a bit of a property resurgence, you think. Is this a perception about life after the election weekend, do you think?
Well, I'm describing it as the property bubble we have to have.
That's a very dangerous idea.
Well, you might remember on the program earlier in the year and last year we talked about the risk of a recession in Australia as a result of the recession that exists, a very real recession that exists in mining construction, mining services and the mining industry now. And if that spreads from WA and the Northern Territory and Queensland, WA is iron ore and Queensland mostly coal, if that spreads to the eastern seaboard, particularly Melbourne and Sydney, then you'll find a lot of consumers pulling their heads in and not spending. But the offsetting influence is the wealth effect and the optimism that comes from people knowing that their house market value, and I'll be careful not to say intrinsic value, but the market value of their house is rising. And so I think the Reserve Bank is very conscious of this effect and the positive influence that can have on the economy.
What is underpinning this, though, for the nervous Nellies, Roger? If, as you say, that fundamentally we might have a problem in our economy with a creeping recession, to follow your argument, and yet we're puffing up the property market, and then potentially, as some people feel, it might burst, then we might be in a real pickle, mightn't we?
Well, the economy, you've got to remember, a large part of the Reserve Bank's job is to instill confidence. And so we have the open market operations, but we also have what's known as the open mouth operations. And that's where the Reserve Bank tries to instill confidence. And I really believe that talk of the recession is probably misplaced now. Anecdotally, I can tell you restaurants are doing a booming trade and people are moving up the price spectrum at restaurants again. They were moving down for a number of years. Retail companies, the listed companies, are reporting reduced decline in their sales. So while some are experiencing declines, it's not declining nearly as fast. And I think a big reason for this is business borrowing, and residential borrowing is now at post-GFC lows, and we've got cash rates at 2.5%. Another industry that's doing really well are real estate agents.
Well, let's go to the housing industry, because I was looking at a company like Cedar Woods Properties. Now, that's a listed company that's coming out of based in Western Australia, yes. But it's actually doing well enough now. It's actually looking to expand into Queensland.
Well, I'm surprised that you mentioned that company. It is a company that we own in the Montgomery fund, so I have to disclose that. But not only are they doing well in Western Australia, and they are at that lower point, the lower price point, they're doing extraordinarily well in Melbourne, and pre-sales are fantastic. AV Jennings, we spoke to them earlier this week, and they've also noted a significant increase in walk-through traffic in their display centres. So I think this has got a little while to go, and I think the talk of a recession is probably misplaced and looking back too far.
Yeah, and what about bottlenecks? So Harry Triguboff really was very concerned about bottlenecks in terms of releasing land, just briefly. Yes,
look, and people like Harry are going to benefit from the release of more land because they can develop properties. It's absolutely essential. Absolutely essential that we understand that as prices lift at auctions and people compete for limited numbers of properties, what we'll see is people walking away and looking to buy off the plan.
All right, Roger Montgomery, thanks again for joining us.
Pleasure, Ticky.